The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another wonderful day at the headquarters of Technical Trading and Investing. This is the Power Trading Hour with me, your humble host, the koala bear of Wall Street, David White. And it is a beautiful March 24th at the headquarters of Technical Trading and Investing. And of course, the weather is beautiful in Tampa, as it is every day. It is beautiful if you're a duck, because then the water just runs right off of you. But get a little misting out here after a gorgeous weekend where we got to watch the Thunderbirds at the local Air Force Base here, MacDill. It was a great weekend for all. And what else can you say? Just another great and wonderful day as we continue with trading. When we look at the markets themselves, recovering a bit after probably a fairly deep pullback. I think we're probably making the B point of an ABC down, and I'm looking for a bounce to get that C point. Right now, as we start to show, we are off, off 9 points on the S&P cash, 1857 on the cash. Pretty much where we saw buying come in last time, right after the FOMC meeting, pretty much the exact same thing today. So it will be interesting. And if we want to, hopefully he's listening, the engineer, he gets a cigar. Anyway, it is another wonderful day out there for his guess. He was guessing what new piece of equipment I have today, and he is correct. So hopefully it'll sound a little bit better today, even when I talk off mic, and we'll try to figure that out. Anyway, that's kind of the beginning of it. We always like to start the show off with a little bit of history because, of course, if you don't know your history, you're bound to repeat it. In this day in 1777, the U.S. foreign debt is born. We started borrowing money pretty much as soon as we were a country. This time we borrowed money, and it was the first time, from the Farmers General of France, a group that collects taxes from French citizens on salt, tobacco, and other products. Agreed to lend the United States 2 million livres, about $381,000 at the time. The loan is repayable in bales of tobacco. So they sent us wonderful cash. We sent them basically debilitating and killing tobacco. What a deal. Well, if we're not businessmen, we're nothing in this country. Now, I kind of expected that we were going to have a few days out here of market turmoil. And of course, if you only look at what happened today in the market, or even the last 2 days, a lot of times you can really get yourself fired up. Had some emails from some people, and I always like to recommend 3 books. The first one is Reminiscence of a Stock Operator. The second one is basically any of the Nassim Taleb books, but mostly Fooled by Randomness. I recommend that extremely highly. And the last book of the 3 books, before I'll even talk to anybody so that they know at least what I'm talking about, is the Mark Douglas book on market psychology. One of the things he says in here is, did you ever wonder why leaving money on the table is often more painful than taking a loss? When we lose, there are many ways that we can rationalize it, shift the blame to the market, not accept responsibility. But when we leave money on the table, we can't blame the market. The market didn't do anything but give us exactly what we wanted and maybe what we expected. I put that part in. But for whatever reason, we weren't capable of acting on that opportunity appropriately. In other words, there's no way to rationalize the pain away. And that is always the short term on it. For all we know, if you were short, the market could rally 50 points tomorrow and you'd hang on to it, give away all your winnings. And of course, the market, you could be long and the market could drop 50 points in the S&P cash tomorrow. So what you do today or what you do tomorrow, probably maybe 6 months from now, you can actually get a better feeling. We, of course, weigh events that have happened recently far stronger than events that probably actually meant something. In the scheme of things, if you can remember what you felt like a few days after 9/11, and then a year or 2 years, it takes a while, especially humans are pretty poor at actually figuring out what things truly mean. Everybody's all hyped up on trying to find this airplane lost on the opposite side of the world. But half as many people die in a giant mudslide, and you can't get anybody here to cover it in the United States. It just depends what we focus on, and a lot of times that pain that you're feeling today, if you step back and think, now, in 6 months ago, would I really feel that pain? No one's going to be perfect and get every high and low in the marketplace. But for me, if I feel some pangs or some anguish about maybe what I didn't trade correctly or what I think I didn't trade correctly, a lot of times one day later, I think, wow, boy, did I dodge a bullet. Now, the problem is we continue to feel that pain. And that's part of being in the market. And what else can you say out here? Just don't wrap too much up into any one day in the market as long as you're successful overall. I think a lot of people kind of think that every time at bat is the ninth inning of the World Series. And, normally they just have one. But every day we get up and the market's open, we get another swing at the bat. So I think we put far too much energy and emotions into a single trade or a single day. And you never know. The next one can come tomorrow. Can you look at that? Okay. I'll get to that in just a minute. We had a couple people out here. Anyway, we've had today in that. We had the pain. We've got the euro. UK was off 0.6. Germany, DAX was off 1.7%. France off 1.4%. Spain 1.4%. Pretty much the rest of the euro out here. When we look at Asia, Japan's Nikkei jumped 1.8%. The Hang Seng surged 1.9%. And the Shanghai Composite gained 0.9. Now, what all this is about, the big pump in especially over there in Asia, is the belief that there's going to be more stimulus coming because someone was talking about it. But I have a feeling that what we are seeing is a lot more of the same and a lot of wishful thinking. But that is the market in general. So what caused all these people to start believing that they were going to see a lot of stimulus out of China? Well, once again, new numbers coming out and for industrial production, and looked pretty horrible, all things considered. Let's see, did I get, the manufacturing report, not that much different than last month, but it is at an 8th-month low, 48.1 from 48.5, so it continues to slip, and everybody continues to think about other things. So anyway, you can always give me a call at 877-927-6648. You can email me at path@tfnn.com, or you can post a message in the den, and I'll try to get it covered on this show. Now, we had old Carl back on CNBC today, and we've got to play Carl's theme every time he comes in, because Carl is Carl. Maybe I need to turn it up. Yes, the godfather of the stock markets is back. He's out pumping HLF again today, mostly on the back of some other news. Probably the most interesting thing was the way he answered the question of whether or not he has sold Netflix. And he said maybe he sold another half. But is that a half of the half that he sold already, or is that another half? And my guess is that now that he's under 5%, we'll probably see that over the last 4 weeks. He probably sold a lot more in that 420 to 450 range as that thing went sideways, and probably one of the best stock operators of the last 30 or 40 years, especially being able to use CNBC as a mouthpiece for it. Let's just listen a little bit more. Oh, Mr. Godfather. So anyway, got tired of the Godfather music. Anyway, pumping HLF, and of course HLF, he's Herbalife, he's getting a couple of people shoved on the board. So I guess this guy is really marrying it, but seems less like an investment and more like a marriage. Normally doesn't work out well. Of course, one of the other big stocks out here moving today was New Skin. Of course, down horribly on Friday. A huge pop out here today because they fined him like $500,000 for cooking the books. And boy, does that send a horrible message for Alibaba coming out here in the near future. $500,000, that's probably about the, half a day's trading bonus by moving this company up far in excess of what this thing was probably worth. But they lied. But probably not that big a deal in China, or at least they don't want it to rock too many boats in front of the Alibaba IPO. But $500,000 fine is nothing to them, and why it is racing up highward today. But the question is, what happens when this thing actually gets back here and the SEC gets involved in this thing? Is this going to get a lot worse? And I have a feeling when we look at the chart of this, it's going to be a much bigger deal. Anyway, we're going to watch and continue watching the markets here and see what happens. But let's see what we have. It is a mad market. And what do we want to look at? Oh, New Skin. So let's take a quick look at that. And then we're going to look at Trove for Mike K in the den when he comes back. New Skin's just coming back up here and filling the gap. And I have a feeling that this thing could get to 110. If the volume really falls out in that, could be very interesting. This thing had two gaps down. I was hoping for one more gap down and making a triple gap play. And you can almost say that it is, and it's got multiple gaps inside gaps, but certainly a violent moving company. And I have a feeling the next leg down is when the SEC gets a hold of these folks, and that's it. So when we come back, we'll look at TROV for Mike K in the den. We'll look at our mail and see if anybody has emailed me, and maybe somebody else put something else in the den, and we'll look at that. Be back in just a moment.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the signal box works, visit the front page of TFNN.com.
Andy Hecht will be hosting his first paid workshop on TFNN, the Techno-Mental Trading Method, which is taking place Friday, March 28th from noon till 3:30 Eastern Time. Relying on his decades of experience as a professional commodities trader for some of the largest and most well-respected firms in the business, Andy will be teaching for 3 full hours discussing the application of the technomentals he uses when trading commodities, futures, inter and intra-commodity spreads, commodity-related stocks, ETFs and ETNs, and related options, and much more. You'll receive an added bonus of a quick reference guide that Andy has put together for everyone that attends that breaks down the U.S. traded commodity-based ETF and ETN products available to you as a trader. The Techno-Mental Trading Method, Friday, March 28th from noon till 3:30 Eastern Time. This workshop will be archived so that if you can't attend live, you can view it whenever you'd like on demand for 30 days. For all the details and to reserve your spot today, visit the front page of TFNN.com. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
As we come back, I had a question in the den about TROV, which is Trovagene. And I'll give you my canned answer for these kind of stocks. If it has less than 300,000 shares on a day, it's a crapshoot, and that's what you have here. This thing's in a bigger trading range between $5 and mid to high sixes. And, you know, maybe it hits the bottom, maybe it hits the top, but statistically, I've done a lot of samples, and you get below 300,000 shares a day, it's like asking 5 people who's going to be the next president. You're not going to put it on the front page of your newspaper. There just isn't a big enough sample size to get any kind of statistical inference. And I would say the same thing with this, is that anything I give on you would be more of a Rorschach test than anything else without proper volume. So I will say I will pass on this, other than this thing kind of looks like it's in some kind of trading range. But who knows? With 100,000 shares a day, you just the entrance and the exits way too narrow. So what else do we have? Oh, I wanted to talk about Apple, one of the few companies moving out here. They are up a little out here, not a lot of volume today, and it continues to be one of these stocks kind of hung out here. I suspect what we're going to see is this thing go sideways for a while, even if the market does start to do a little bit of an ABC. And, of course, this is probably the B to C leg. I think we're starting in the market now. And the next ABC down, or the next C to D leg starting in the market is going to probably set up the break of this 1850 area on the S&P cash, and it's going to start the reality of, I think, that we've hit a market. Yes, Mike K., I covered Trove already. So you can go back and listen to the repeat. Anyway, we've got to what else do we have here? Just looking at a lot of news and everything else that's moving out here. Real hard to say anything. Again, for those people who are new to the show and haven't listened, I don't put a lot of stock into what happens on expiration day, and I don't put a lot of stock into what happens on the day after and the day after that. Normally, you have 2 days of option rollover. There is volatility that is put into the market to let people in and out of positions. And I don't put a lot of, or let me put it, I put less into it. But I think what we have had is the last few days setting up from Wednesday of last week, which is we've got an ABC set up, and I'm hoping for a decent bounce once again on light volume to set this up. Now, we are going to have 9 IPOs this week. When you look through them, they're nothing to nothing to phone home about. These things are just a whole bunch of mess, actually. I'm not going to even bother going through these, but there's one, TriNet, may be interesting, but for the most part, these are the last flotsam and jetsam they're trying to push out on the market. I don't know if they can continue to get this B2C leg and to hold up into the Alibaba IPO, but it certainly looks like maybe the market is looking at trying to let a little bit of the air out of the bubble here, and then maybe ramp back up into that. Could be. Maybe some tax selling going on, maybe a little bit of people starting to raise cash when this thing goes public and takes $150 to $200 billion out of the market. Again, the Fed's been pumping with $80 billion. Unclear exactly how much of the stock of Alibaba is going to go out the door at one time, but a much higher percentage than most of these. I would not be surprised to see $50 to $70 billion worth of stock go out in the first day, leaving probably 50% of it to be pushed out in the market over the years to come. But we talked about it a little bit on the Tom O'Brien show on Friday. I just don't like being in any Chinese stock since you can't look at their books. And I think Tom and I agreed on one thing. If you can't see the books, you can't own the company long. You can short it, but again, they can tell you anything and you can't dispute it. And we went through all the companies the FCC has in China on suspension, on double secret probation. And don't you like that reference for those people that get it? You never know. Anyway, we're looking at Apple. I think this thing's kind of going to go sideways, but this reminds me of a little bit of distribution. I have a feeling we're going to get a nice clean signal on Apple, and maybe that signal is going to be the C point in the market as we come back. Anyway, we're going to go through a great deal more stocks before the end of the day. And you can always give me a call at 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And as we come back, it is a little interesting out here. We're looking at gold. If you look at the COMEX, gold fell $24.40 to $13.11. If you look at the current contract, it's at $13.11 down $24.80. So pretty much the same thing. Not a lot of movement since that COMEX close versus the electronics. Probably the more interesting thing I am looking out at here today is the dollar index. It's just a hair, about 6 cents above this $80 level, and I have a feeling that has a lot more to do with how this market is doing today, or not doing. When we go back and look at the market itself, we're off 9 points on the S&P cash. We got down as low as 1849 before the buying started coming in this time. Just under 2.3 billion shares with an hour and a half left. So volume is going to increase a little bit, probably a little bit over what we saw on Friday, but it's not going to be that much bigger or what we saw earlier or later in that week. So we still haven't had, why we have had some of these stocks crack, and we're going to get into that in a minute. We still haven't had the broad market flood of sellers coming in, and that's why I'm thinking we might have, I'd like to see the close today, but I'm not going to be so surprised that we don't see a push maybe Tuesday and Wednesday, maybe into Thursday, setting up maybe an ABC and the move back down. But right now, it doesn't look like we have enough energy to break out the lows in this market. And that may just be these guys sitting there buying everything when the market pulls back until they get that Alibaba IPO out the door. And if you're thinking of, I'm harping on this just a little bit too much, a lot of these guys will make $4 billion in a quarter or $4.5 billion in a quarter, like J.P. Morgan or Goldman Sachs or something. I can't underestimate just how much and how huge they can make money on a big IPO like this if it does go out the door, somewhere between $150 billion or $200 billion in the market cap department. They're going to instantly, 5 of the biggest banks and 20 of the smallest banks, they're all going to probably divide up probably a little less than $2 billion. Not a bad paycheck for a couple of days' work, but it gets better than that. They're going to get probably get a hunk of shares. We don't know exactly what yet. Those shares are probably going to be at a fairly decent discount. They'll have to hold them for 90 days or 6 months, and they'll be doing that. And that could be worth $5-10 billion on the back end of it, or an entire quarter's worth of profits, especially when they invest other people's money. Especially at the top. It's not beyond the scope of reason of these guys going out here and pushing stuff for a while longer. Going to Ken in Denver. How you doing, Ken?
I'm fine, David. How are you doing?
Another day in paradise.
Yeah, I was listening to you on Friday with Tom O'Brien.
Mm-hmm.
You guys think there may be a follow-through on the indexes?
I think this today is probably the B point, and we're going to go to the C. And at that C, we're going to probably then get an extended C to D leg. So maybe go ahead.
Okay. I was going to look at the TZA. I don't have a position, and I'd be interested in getting some and a stop for that.
I mean, the stop's real easy. You don't want to be below 1431 for a close, right?
Yep.
And you've got a high volume low there. Probably going to get tested. That's one of the things I've been looking at. You can say that maybe it was tested on Friday, and that is, what was the low there? Low was 1435. So you still had 4 cents that you didn't get tested out here? Go ahead.
You say a stop at 1431?
You wouldn't want to see it close below that.
See, I had a position, probably a couple of months ago, and it was 1601 or something low.
Yeah.
I thought I want to take that low out, and he took it out, and I got stopped out, So.
Yep. Well, I do this, which is you don't want it to close below that level. Not that you don't want to hit it. You don't want to close below it.
Below it, right.
Okay. But there's two different things. I'll guarantee you if you put a stop in, they're going to go hit it.
Well,
I mean, that's the whole point of high-frequency trading, right?
Huh?
If you put a stop in, it's going to get, at some point, the market's going to get thin, and they're going to run every one of those stops out of the market. That's the whole point of high-frequency trading.
But like the way you were saying, they will hold this market up till Alibaba comes IPO.
I'm thinking that that could be one of the scenarios. This market is incredibly weak. And I know it, and everybody else knows it. We're starting to see, in fact, when I get off the line with you, we're going to talk about a few of these stocks that have already rolled over, especially these stocks with 3-gap plays in them. Yeah. And when we look at these things, they've been up on incredibly light volume, and they're cracking here, not any surprise. Other than the fact that...
Well, it's kind of volatile today. I was watching the Dow down 80 points, and then it almost got the green, and now it's, kind of flat, so...
Yeah, I mean, there isn't a lot of strength in this marketplace, but my guess is that, we could have 20 upgrades tomorrow, and it could go up once again on light volume, and they could run the shorts one more time. I don't think that there's any energy to blow out the top, but every time some of the shorts, they just run them one more time. So I think as long as people continue to short, they're probably going to have an opportunity to continue to push this market. So,
do you think he's doing the B to C leg?
Yes. I think we hit the A to B down here, and we're going to go to the C to D over the next 4 or 5 days if we're lucky. And at that point, we're going to get an opportunity to pull the trigger and find the weakest stocks. So I think you just want to be very close. Again, I don't put in a lot of stock in what happens on options expiration or the 2 days after it. So I think Wednesday is going to be the day we're going to see the true character of this market. If we get one more push up with no volume, then maybe Wednesday, Thursday.
Well, like you say last Friday, we'll see if Monday comes, that you want to have a consistent trend where the market's going down.
Yeah.
But it hasn't done that. Every time it goes down, like Tom said, you got rewarded for buying.
Yep. Everybody does. I mean, we're off 8 points on the S&P cash. A lot more of this is going to be known probably 15 or 30 minutes to the end of the day. But I suspect we close something like 5 points off on the S&P cash, and then we probably go positive tomorrow, and we probably push that into Wednesday, and we get back up there one more time with light or no volume, and there's going to be a ton of ABCs in this market set up. And I think
look
that's
at the biotech last Friday, like you guys were talking, and look at the NASDAQ today. It was down like 1 in the
I talk a lot about Jesse Livermore's book about Reminiscence of a Stock Operator.
Sure.
And there's a point in his book, and I think it's around 1906 or 1907, he's talking about there was a big earthquake in San Francisco, and he went short. And it was like 1 day after the earthquake, and he basically shorts all these railroad stocks and everything else that are going to be impacted in San Francisco. And it says, and he goes, 1 day, nothing happens. 2 days, nothing happens. 3 days, nothing happens. And he just decides to stay short. But he knows that at one point this market's got to crack because all the things are going to be affected by nothing being able to come into those ports in San Francisco. And he says, about 5th day in, market finally cracks. And I think that there's a lot of things like that in the market where you get the news, maybe it acts a little weak, then it rallies, then you find that there's no energy in it, and everybody finally goes, oh, yeah, markets are going lower. And the market finally turns and breaks. And that's kind of the way things work. So it's not always, it's not like a light switch where everything just on and off. A lot of times, especially when you get at these highs, they're going to make you pay and pay and pay and sweat and blood. And if you heard my monologue before about leaving money on the table, I think every kind of bad thing that can happen to someone who's short has happened out here, and only the penitent man is going to make a lot of cash when this thing cracks, because you're going to have to be extremely strong in your beliefs to hold to a market like that. Anything else?
Do you put a mental stop in there, or do you put a physical stop in your trade?
No, I just watch my stocks all day long, and if they close below a place that I want, then I'll go ahead. Or if I think they're going to close below, like in this one, I would want to watch the end of the day to see whether or not if it closed below 1431. If it did, I'd say, okay, out of there. Or if it was closing higher than a certain number, I'd say, okay, I can't remain short or long that stock. But most of the time, unless you put a stop way out of the anywhere close to the stock, to the price of the stock, they'll just run and get it during the day. So
I always look at the swing low, and I thought 1601 was the low, and boy, it took it out a couple months ago.
Now that's what it'll do. Anyway, thanks for the call. We're going to go to a few more stocks.
I appreciate your time.
You bet. And we've got let's see. TCA, we've got Mike from Dallas, ABCs. How you doing today, Mike?
David, I was just wanting to know where on the TFNN website I might be able to get the information or just a general information on the ABC.
Well, besides the ABCs, there's all kinds of stuff. So are you watching on Tiger TV?
Yes.
Okay. If you go to TFNN.com, down in the carousel, it'll say across the top in the tabs, listen live, newsletters, upcoming events. The last one says charts.
Yes.
Click on that. Down there in the middle of it, it'll say learn more. And there's a little link right there that I'm showing. You click on that, and it'll take you to a bunch of videos that are about how to use the Art of Timing the Trade chart software. But
Okay.
80% of it is the basic patterns and what they look like. So if you want to know and understand Gartley's, these things are all like 3, 4, 5 minutes, and they're all short, sweet, and swallowable. And you can see how some of the stuff in the software works. But more important, you'll see when we're talking about how ABC is set up and what they do, and what they look like. But about 80% of it has nothing to do with the software, but how we set these patterns up and how they look.
Right. Okay. Well, thank you very much.
You bet. In fact, hopefully Tommy is listening, and we can record this little section and send it to Tommy. Anyway, other things going on. My phone, for some reason, has got to be, some horrible messages. Why do people keep on sending you things when they know you're on the air? Anyway, I'll try to get some of this other stuff done. Without any callers, I need to check my email, I guess, just to make sure someone had an email. We got something here. CYTR for Mike in Kenny Bunkport. CYTR. And what do we have here? Okay. Citrix Corporation. We've got another phone call, too. We'll go to in just a minute. CYTR Corporation, CYTR. I tell you what, you're pretty much there. Let me think about this. Let's go to Janice in Bucks County, Pennsylvania. How you doing today? I guess she wanted to look at Walmart, and I'm not exactly sure what she wanted to do in here. You had some nice volume on Friday. This thing is kind of trying to get back up into that $78 range. I don't know what you're planning on doing on it, but this thing pretty much probably in a trading range between 72.5 and 78, maybe as high as 79. But you got some volume back in there. But that whole area right in here, which is the 1218 to what is that? About the 15th of January is that consolidation area, and this thing's headed back up into that, and that's where we're going to probably start seeing it. But I'd say 78, 78.50 is where this thing is probably headed up, and in a bigger consolidation range between 72.5 and 78.5, 79. So hopefully that's it. Oh, and we have a miserable phone. Well, we'll see if we can do something about that. Okay. Anyway, we had that question again. Go back and look at CYTR. Looks like it's pretty much all set up out here. You had light volume. You had 7 million shares on March 14th. You got 1.4 million shares today. That's in the gap that started back on the 11th of December at 31 million shares. I mean, this is the classic Wyckoff buy pattern on CYT RX Corporation. CYTR is the symbol on it. I would have liked to seen one more bounce and maybe one more pullback into the $4, maybe $3.75 range with no volume. But I mean, awful hard to say. If this market was bullish, I was ready to go. I'd buy it right here and live to probably 350.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we are back again. If you are real quick, you can call me at 877-927-6648. We're going to look at some of these high flyers that have fallen from grace. Netflix down. And you'd like to see a little bit more volume. This thing actually getting back up into the volume day that we had on the 23rd of January, where this thing came up on 13 million shares on, I think that was the earnings date, down on 4.6 million shares today. So probably exhaustion move on this. Maybe this thing gets 6 million shares today, but certainly still going to be at least half of that January 23rd bounce out of here. Of course, a lot of these stocks have 3 gap plays that are pretty much set up, and none bigger than Netflix out here. And again, what I'm looking for, especially in a lot of these stocks, is a 50 to 618 retracement. Probably going to get that in Netflix if we are lucky and get yet another shot on it. Probably going to take a little bit of energy to break this thing down, but I think we're probably looking over 6 months or 9 months. Good opportunity to go back and see all those major gaps in Netflix, in Tesla, in the rest of these stocks. but probably nothing weaker than Netflix at the moment. Of course, the CEO was out on Thursday night talking about just how much it's going to cost him to pay off the Comcast and the Time Warners of the world to allow people to watch Netflix on his streaming service. But a little hard to tell. When we look at TSLA, of course, all these high flyers a little bit weaker. Of course, you've got a nice three-gap play in Tesla also set up, pretty much filling the first gap today and doing a little reversal as we have in the general market. And we're off 8 points on the S&P cash, 2.4 billion shares on the consolidated New York Stock Exchange date. But we've got a nice little movement now on Tesla. What might you get? $244. If we could get back up into there with some really light volume, that may be setting up a nice ABC down to take us probably into the 180 area on that. But just about all these stocks look like they have a good opportunity to start breaking down. And, of course, some of these are down and have finished their ABCs, like Herbalife. This thing had a nice projection. Let's take a look at that. And pretty much that's about another $3 to go. But I have a feeling that's pretty much it on Herbalife. And maybe you're getting set up for one more ABC down on Herbalife. But the party kind of looks like the party's over for Carl Icahn and his Godfather bunch on this one. A little bounce out of here today on him getting 2 or 3 more people on the board of this thing. Another stock that looks to me like maybe we're finally getting some kind of level where this thing is basing out, and that is Twitter. This thing hasn't, had kind of a nice run out of the IPO gate out here. Has a high volume high out here on December 26. Is that right? Yeah. High volume high with 60 million shares. Made an island reversal out here. But what I'm looking at is the $49.99 level on February 6th. So $50 comes back through it. You need to close back above $50, but you've got 9.6 million shares going into that 64 million share low out here. So this thing could have a nice range between $75 and $50. But my guess is we're probably setting up some ABCs or sideways consolidations before we break lower in a lot of these particular high flyers. Stocks that haven't made any money, we'll get to it tomorrow, I guess. Remember, sell when you can, not when you have to. See you tomorrow. Same bat channel, same bat time.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.